Blockchain explained in simple terms that anyone can understand. In today's video, I'm going to explain what the blockchain is, how it works, and if you stay till the end, I'll give you the 5 ways I believe the blockchain will change life as we know it on this planet. Welcome guys to a new CryptoVert video where I help simplify blockchain technology, cryptocurrencies, and what it all really means for us moving forward. We now find ourselves at the beginning of arguably one of the biggest innovations in human history since the invention of the internet. And with that comes some big opportunities to get ahead, no matter what industry you're in. And I want to help you understand what those opportunities might be. So if you find my content valuable, be sure to hit the subscribe button and share this video. So you may have heard about Bitcoin or cryptocurrency before, but what is this blockchain you speak of, and how does it work, and why does it even matter? Blockchain is a revolutionary new technology that in simple terms will transform the way we trust and transact with each other, our governments, companies, and institutions moving into the future by actually removing the need to trust at all, and at the same time removing the need for the middleman that centrally controls things today. So what exactly is it? Blockchain is a decentralized and distributed data structure technology for managing electronic data without a central admin or middleman between people who know nothing about one another. Originally designed for the cryptocurrency Bitcoin, the blockchain architecture was driven by a radical rejection of government-guaranteed money and bank-controlled payments in the wake of the 2008 financial collapse. The inventor of Bitcoin, Satoshi Nakamoto, envisioned people spending money without friction, intermediaries, regulation, or the need to know or trust other parties. Today, billions of dollars are now being poured into the development of blockchain technologies in major industries all over the planet. Even entire governments are getting involved now. So, what is a blockchain? Essentially, it's a shared distributed ledger that stores information about transactions in a decentralized way. Essentially, all that means it's a database that's not owned by anyone in one place. It's distributed. So to understand distributed and the blockchain, there's another term I want you to understand, which is ledger. It's a distributed ledger. So what is a ledger? A ledger just keeps track of important information that's valuable, like a spreadsheet. So examples of ledgers are bank accounts. You keep a ledger of what's in there, what goes in and what goes out, loan contracts, credit card transactions, supply chain logistics, libraries, what books are in, what books are checked out, the DMV, the records on your automobiles, government records, they all keep a ledger, property titles, patents, you get the point. That's what I mean by a ledger, okay? So here's the old way things worked. Alex wants to send $1,000 to Larry. Larry wants to receive $1,000 from Alex. Well, they can't send $1,000 directly to each other without handing him cash or mailing him the actual cash, right? In order to send, for Alex to send Larry $1,000, if he, say, lives somewhere else, you would have to go through a bank, right? They have centralized control. They keep the ledger of what's in Alex's account and what's in Larry's account, right? They act as the middlemen. They verify the transaction, make sure that Alex has $1,000 to actually send to Larry, but they charge fees, and ultimately, they control your money. So Alex could send the money to Larry, but the bank might think that the $1,000 is suspicious and they put a hold on Larry's account. So now Larry can't touch his money for 5 days, 10 days, whatever, for them to verify the transaction. If you're talking about more money, it gets even more complicated. So in reality, you don't really control your own money. The bank controls your money. And they do all kinds of other funny business like loan out your money and get interest on it. They do all kinds of fancy derivatives and stuff like that. So they're in control of your money. They are the middlemen. Let's take a look at another example. Alex wants to send money to a good cause. There was a tragedy in a third world country, and Ivan is over there in this third world country, and he needs help to survive in this third world country. Well, the only way to get Ivan the money from Alex is basically through a charity, right? The charity acts as a middleman. They facilitate the transaction, okay? However, the big problem with charities, and most people don't trust charities now, is because we know that it takes a majority of the money to operate the charity itself. Okay, they do distribute the funds. However, for every dollar that's spent or donated, a lot of times it's 60 to 90% of it goes into operating the charity itself. okay? And there's been a bunch of scandals where charities are paying people exuberant salaries, buying private jets, all that kind of stuff. So this is the way things are right now, okay? The new blockchain way, this is how things would work. Alex wants to send Larry $1,000. Well, through a decentralized blockchain network like Bitcoin or Litecoin or one of the other cryptocurrencies, he could do that directly to Larry without a middleman, okay? And they're both in control of their own accounts. The same situation, Alex wants to send money to a good cause. Well, there are blockchain technologies and cryptocurrencies that are around the charity space. Well, through a decentralized network, Alex can now ensure that Ivan gets the money, right? The person that needs the money. They could even ensure that the money is spent on what it's intended for without needing a middleman, right? No charity taking 90% of the donated money for private jets or expensive salaries. This is essentially what is possible with a decentralized blockchain network, okay? So these are some terms you need to understand, and I'm going to go over each and every one by one. You need to understand the term block, hash, proof of work, wallet, and I've added another one called smart contracts because I think it's very important to the evolution of blockchain moving forward. So I'm going to bring it all together after you understand what each term means, okay? What is a block? This is what a block is essentially at its high-level parts. The block contains data, information, valuable information. It could be money or assets, files. It could be titles of ownership, medical records, patents, copyright ownership. You get the point. It could be anything that's valuable can be stored in a block. And it can be stored in a block to where it's tamper-proof and secure. And the second part of a block is the hash. And hash, I want you to think of as just a digital encrypted fingerprint, okay? It goes into cryptography, but all you need to know is it's unique, and it's as unique as a fingerprint. And then each block has the hash of the previous block attached to it, okay? Those are the three parts of a block. And again, a hash is a unique digital fingerprint. The information stored in the block determines the unique hash or digital fingerprint. If anything inside the block is changed, then the hash is also changed, which makes it easy to determine if a block has been altered or tampered with, right? If you change what's inside this block, then the hash will change. So just think hash is a fingerprint. So how does it make a chain? This is how it works. So these are all blocks, okay? The first block is called the Genesis block, and it doesn't have the previous hash because it is the first one. But after that, the next block will have the first hash of the first block. So this is this hash or fingerprint linked to the first one, and they form a chain. Okay, why is this important? Because Mr. Hacker here, he wants to come in and make a change to an old block. Well, when he tries to change this old block, it changes the hash. Therefore, it's very easy to detect if anybody's altered with anything, and there's a few reasons why. So the other part of this is what's called proof of work. So proof of work is a process of computers solving impossibly complex math puzzles that they're so hard that they have to make guesses until someone guesses it right. The trick is that they're very hard, but they're very easy to check and verify is correct in order to prevent any cheating or fraud. So I want to make this simpler. Imagine it's like rolling dice, okay? Each of these people are doing the proof of work, which would signify a computer. Basically, the math problem's so hard that all they can do is guess. So if they just got to keep rolling the dice until they get the right answer. The right answer in this case is 9, but they don't know that yet. They have to just keep rolling the dice until they get 9. Well, eventually one of them gets 9, okay? Well, once they find a solution, everyone gets that solution and they can easily check that 9 is the correct answer, okay? That's essentially what proof of work is, and it's the process. It's also called mining. That's how they mine, right? But these two things, the hash and the proof of work, are what secures the blockchain network, and I'll get more into that in a moment. What is a wallet? Well, it's exactly what it sounds like. It's a digital wallet that stores cryptocurrency assets. Now, this could be information or money. In the future, it could be a lot of things. But right now, the biggest use case right now is funds, right? So there's a lot of parts to wallet, but the two main parts that you need to know about are the public key, which is like your public address for your wallet, and then the private key, which is a secret key to access the wallet. And you never, ever want to give out your private key. Okay. The public key is like, how do you send money to me? Well, you give them your public address, they can send money to you, but you can't access that money without the private key. Okay. So I'm going to bring it all together for you here. This is essentially how it works. It is very simplified. Okay. So someone requests a transaction. The transaction goes to the decentralized network of computers and receives the request, and that validates the transaction. Remember, you used to have a middleman. The decentralized network now validates the transaction. They also now race to solve the math problem, a puzzle. This is where proof of work happens. So two parts happen. It validates that there's funds in the account and that they're valid addresses, and then they try to solve the problem to now add that information to the blockchain. So the next step is, once the answer is found, it's broadcast to the other computers to check that the answer is correct, which is called reaching consensus. So once a consensus is reached that the accounts are verified, the question was answered correctly, the math puzzle was answered, then that person that solved that equation gets to add that information into the blockchain. So the transaction is added with other transactions into a new block to the blockchain. So the new block is added in a way to make it permanent and unalterable, and that leads to the transaction being completed. So I hope that's simplified. That's a very simple way of looking at it, but essentially it's transaction, the network verifies the transaction, solves a problem in order to add it to the block, to add that transaction to a block on the blockchain. Once it's in the blockchain, it can't be changed, right? That's what makes it so secure. So I want to get into the next part of this, which is smart contracts. So what are smart contracts? These are contracts that can be written into computer code that are stored into a blockchain that will self-execute when agreed upon conditions are met. These contracts cannot be changed after they are created because they're on the blockchain. So the simplest analogy I can find is, think about a vending machine. If you put $1 in and you select a soda, then the soda is released. It's essentially a smart contract. This in practice through a blockchain would work in changing a lot of things in our world today. So the possibilities for smart contracts are vast. So property ownership, records, insurance, mortgages, medical research, voting, crowdfunding, autonomous ride sharing. I mean, let's look at insurance, for example, right? Let's say there's a farmer who owns this land and he buys crop insurance. If there's a drought, then he gets a certain payout. Well, insurances now would have to go through all these different processes and all these different people to essentially run that insurance and pay out a claim if it happens. Well, if there was a smart contract that took data from sensors, right? You could see temperature data. If you could code into the smart contract that if the temperature is above a certain temperature, let's say 100 degrees for more than 90 days or 100 days, well, that would be considered a drought. Well, if those conditions are met, then an automatic payment of $10,000 is sent to the farmer because he had his insurance through a smart contract. It didn't need an insurance company, an insurance adjuster. It didn't need anybody. If the conditions were met, like if you put $1 in and you select a soda, the soda is released. Well, in this case, if these conditions were met, then the contract would execute automatically and cannot be changed. Therefore, the farmer is secure in paying for this insurance because he knows if the conditions are met, then it's automatically going to happen. Now, this changes a lot of things, and I'm going to create some other videos about smart contracts, but smart contracts are built on top of a blockchain network, okay? And these are really poised to make a huge difference in the world of how almost every industry could possibly work. So blockchain tech is evolving rapidly, and with any technology, there are issues and problems that need to be solved. However, this technology opens up the world to a whole new set of possibilities that have the potential to transform life as we know it on this planet in the coming years and decades. The good thing is that we're still at the beginning and opportunities are only limited by our imagination. All right, so we made it to the very end of this video. As promised, here are the 5 ways that I believe blockchain will change our world. Number 1, money and finance. If you haven't heard of Bitcoin yet, then I don't know what hole you've been hiding in, but it's shaken up the world of finance. Now, there are a lot of people who are skeptical about this technology and Bitcoin and cryptocurrencies in general. And I just believe that it's because they don't understand it and what it means and how it works that they're kind of shunning the technology. But cryptocurrencies are here to stay. And it is, in fact, going to be the future of finance and money. Now, I'm not saying that money is just going to disappear and it's only going to be digital, which in the future it could be. However, what I'm saying is that money and finance is the biggest space that blockchain is disrupting right now. And these middlemen have to find ways to become and stay relevant. Because now you're no longer going to need a bank to transact day to day, right? This is possible right now. You don't need a bank account. You can transact solely in cryptocurrencies. And there's some services that you need to use, but it is possible. And in the future, I'm just seeing that more possible. This also brings a massive amount of the human population that is unbanked, that cannot get bank accounts, that cannot get access to modern finance and banking institutions because of where they live, or there's too much corruption, or whatever reason. The blockchain and cryptocurrencies allow them to be a part of this global economy. So I do believe that money and finance is going to be the most radically changed by blockchain right now and in the next few years, 2 years, 3 years, 5 years. Things are going to look very, very different when it comes to money and finance when it comes to blockchain. Number 2, smart contracts, decentralized apps, and autonomous organizations. You see, if you take a bunch of smart contracts, you can create what's called decentralized applications, which are applications that are not run on any one server or place, right? So you can do all kinds of crazy things with decentralized applications where there's no central middleman controlling that application or what that application does. It's decentralized. And through smart contracts and decentralized applications, you can have fully autonomous organizations, meaning companies and institutions that solely run on smart contracts and decentralized apps. Now, this is possible. It's a complex thing, but it is going to be possible in the future where you wouldn't even need a CEO, where the company is run by a decentralized autonomous organization. Obviously, there's people involved, but it's still basically autonomous. Okay, I think we're going to see a huge, huge leap forward in this space over the next 5 years. Number 3, identity. Because blockchain is so secure and it's built to be tamper-proof, I believe that you're going to see a lot of governments issuing IDs on the blockchain. There is a government called Estonia, I believe, who's already issued an ID on the blockchain. But you're going to see other governments leading towards that technology because it's tamper-proof, right? You can't make copies of it. You can't change things. It's immutable. So it lends its use very well to properly identifying people. And the other part of that is property ownership, I believe, because for the same reasons. You can track ownership and it's immutable. You can't tamper with it. You can't mess with it. You can't make copies of it. You can't forge it because of blockchain technology. So that's my number 3. Number 4, which is one of the biggest use cases that I see for blockchain, is supply chain management. Managing things from the source, minerals and materials from the source all the way through production and development and manufacturing. You're going to see massive developments in supply chain management on the blockchain. I'm not in the supply chain industry, but I'm sure that if you are, you probably have already heard about blockchain and your company's probably already involved in some sort of blockchain development because the use is so massive there, the benefits there, sharing one single ledger between vendors and manufacturers. And I mean, it's just crazy what's possible with the blockchain. And there's a few different platforms that are already being developed for that specific use case. So that's number 4. Number 5 is kind of a wild card here because I think that artificial intelligence plus blockchain, that equals some wild possibilities. I mean, autonomous vehicles. There was one that I was reading about that had to do with an artificial intelligence protocol that was monitoring patient data that would be posted on a real-time blockchain and making assessments based on real-time blockchain medical data. So you mix artificial intelligence plus the blockchain, and you've got some pretty crazy things that could happen. So this one's kind of like the Wild West. There's so many people haven't even thought of all the use cases for this, but I think that it would be very interesting to see how it develops, how blockchain and artificial intelligence together develops. I think it's going to be really crazy what we're going to see come out of that space. So anyway, guys, that's it. That's all I got for you for this video. I want to thank you guys for watching. If you like this content, if you like this video, please like and subscribe and share this video. And I look forward to seeing you guys on the next one.